African Bank, audacity to believe.
Good morning, everyone, and thank you for making time to join us at this year's African Bank financial year results. I will be joined later today in this presentation by colleagues Zweli, Sibongiseni, and Anban, who will zero in on each business unit's performance for the year, and of course, a bit more time for Anban as he takes us through the financial results. The structure for our presentation is that I will cover a bit of our strategic overview. Where are we in our direction of travel with respect to our strategy? A take on performance per business lines, which Zweli and Sibongiseni will join in on, and then spend most of our time with Anban on the financial analysis for the year. I will then return to close off presentation with a bit of a look ahead to FY25. The main theme for this year's financial results is that we really are on track with respect to the execution of our Accelerate 25 strategy. This strategy has proven successful in building resilience in our business, scalability in the capabilities that we are bringing in for our much larger client franchise, and of course, bringing sustainability in the bank. We'll also touch on the rationale behind the extended pre-IPO timelines and how these seek to de-risk and safe-proof our IPO ultimately after the FY25 results. Accelerate 25 strategy is a strategy that we introduced in 2021. It is a strategy inspired by our raison d'être, our reason for being. This is something that comes deep from the heritage of this bank, when our founding fathers and mothers decided that this country needs a bank for the people, by the people, serving the people. A bank whose purpose would be to enhance the lives of the underserved and underserviced markets in this country, both households, entrepreneurs, and small medium enterprises. It is heritage that inspires our direction of travel with respect to how we seek to build a customer-centric, data and digitally enabled bank that is diverse in its offerings, is scalable and sustainable. It is a bank that would offer a compelling listing proposition for investors, current and new investors. It is a strategy that we launched in 2021, as I've said, co-created by our people, our customers' input, but hundreds and hundreds of colleagues who answered the question, what is the bank that we're wanting to build? What is it that we must do to build that bank for the people, by the people, a bank that obsesses about the underserved and underserviced? What is it that we needed to do? What is it that we needed to change? What is it that we needed to do better to build this bank together that is customer-centric and, as I've said, data and digitally enabled? 2021, we spent time co-creating this strategy, getting the right buy-in from our board, from our shareholders and stakeholders. In 2022, we obviously spent time entrenching the strategy in terms of particularly strengthening the core of our business in retail banking and ensuring that we fast-track our movement from being a micro-lending retail bank into a fully fledged retail bank that serves our customers beyond just one single product. 2022 was also a year of opportunity for us to acquire Ubank, to acquire Grindrod Bank, banks that enable us to get capabilities both in strengthening the core of our retail franchise, but also return to serving businesses and serving entrepreneurs in this country at the back of the business franchise that we acquired from Grindrod Bank. So 2022, a year of entrenching the strategy, 2023, a year of integrating all these three banks together and making sure that they are focused, they've got the right target operating model to deliver the strategy that is Accelerate 25, and ensure that we adopt the right ways of working to deliver on our strategy. In 2023, we also started preparing for the IPO journey and what our plan would be in exiting those shareholders that only came onto this company to assist us through the curatorship program 10, 12 years ago. FY24, the year that we're reporting today, has been a remarkable year for us. It's been a year where we focused on driving business towards progressively meeting the key financial ratios that would make us successful in terms of not just Accelerate 25 strategy implementation, but these key financial ratios that investors are looking for to say that we are indeed a compelling listing proposition for them. So as you will see throughout this morning's presentation, we'll speak of FY24 as a year wherein we continued to work on building a transactional services franchise and build on diversifying our revenue streams through secured lending, particularly given the tough times that retail customers went through with the credit crunch of 2023-2024. 2024 has also been a year where we worked hard at strengthening the core of the bank, so the end-to-end risk management of the company, and also maturing our culture of compliance in the bank, ensuring that as we accelerate the growth and diversification of the bank, the middle and back office is just as strong to support our franchise. We'll also report, as I've indicated earlier, that 2024 is a year where we started with meaning our journey towards the IPO. We're delighted that the strategy execution has been very successful this year, despite what are continued tough macroeconomic environments that we are trading in. The kind of results we're presenting this morning show a business that is resilient in navigating through tough times. This year was a big year for South Africa in our operating market. It is a year where on the 29th of May, a new government was ushered into this country. The Government of National Unity represents green shoots in terms of tackling deep South African economic challenges that bedevil our trading environment. The policy stability promised by the GNU has received very good backing and support from both global and domestic investors. And we're quite chuffed that if this persists throughout its tenure, we really do have a chance to turn the corner in terms of what is otherwise been a tough macro trading environment. The global and domestic inflation and interest rate outlook has improved, and we're looking to an easing cycle both with our major trading partners and in South Africa. The second reduction in interest rates last week Thursday by the Monetary Policy Committee of the Reserve Bank gives a bit more space for households' disposable income in FY25 and for companies to be able to pay significantly less for the credit that they've got on their book and therefore ability to back their customers going forward. These positive signs for trading in the rest of 2024 and in 2025 are, however, subdued by what continues to be protracted conflicts in the Russia, Ukraine, and Middle East areas, constraining global growth and the impact on us as an export-led economy in South Africa. Notwithstanding these tough trading economic environment that I've just described, I am delighted to say that the execution of our Accelerate 25 strategy is playing out well. The diversification of our revenue streams, the de-risking of our balance sheet, the building on board of capabilities to support our significantly larger client base is starting to come through in terms of both our balance sheet, income statement, and cash flow. And this, of course, is exactly what we had set out to achieve with this plan that is Accelerate 25. We'll be reporting today that we've grown our gross advances to just slightly below 50 billion. Almost doubling it to the time when we started this strategy in 2021. The group net advances have gone up year on year by 8%, led significantly by 15% outperformance in business and commercial, these being assets that are largely secured and backing enterprises that have come with the businesses that we've acquired in Greenroad Bank and our flourishing support for entrepreneurs in this country. The 4% increase in our personal bank is largely due to a much stronger card offering that we have and us getting into tech devices and purpose lending in personal banking. Our unsecured retail book, as important as it still is in our franchise, has grown significantly less than in previous years, enabling us to de-risk the balance sheet, diversify our revenue streams in line with our strategy. And so this 8% growth in a tough environment like this is a growth that takes place with diversification at the helm. It is a growth that's taken place at a time of proactively tightening our credit criteria to unsecured lending in line with the trading environment I've just described. And it is a growth that's taking place with an impetus on improved collections that with time are going to benefit us in terms of reducing credit impairment and the coverage ratio that is taking a lot of our resources at this time. And so we are chuffed that these results really speak of better outcomes in the transactional services capability that we've brought on board with our winning My World transactional product in personal banking and steadily extending that to our business and commercial clients. The rise in purpose lending and secured lending income is also a key topic for us in a year where we're very deliberate, as I've said, in constraining retail unsecured lending. All of this has been achieved whilst maintaining disciplined capital allocation. We are well capitalized at over 31.4% of our capital adequacy ratio and with a significant surplus in our liquidity at over 7.1 billion, giving us optionality with continued support for the capabilities we've brought on board and more that we need going forward. This year marks a key milestone for us as we crossed the psychologically important total operating profits after impairment of 5 billion rands. 5 billion rands of total operating profits after impairment represents over 8% increase year on year, but as I've said, a psychologically important level around the performance of this business, its resilience through tough times, and the franchise that will benefit us going forward. We're able to achieve this increase whilst managing our operational expenditure quite tightly. A 1% increase in OPEX speaks of that discipline that we've had at a year that had so much, in fact, that was still being invested in the business, in the muscle of the business going forward. All of this results in a benign but important improvement in our net profit after tax at 523 million year on year, a significant improvement to half-year results that were less than 200 million. All of these results are really a part of a story of key milestones for us in FY24. We spoke about how Accelerate 25 is very much about diversification of revenues. It is very much about de-risking the business from over-reliance in just unsecured retail lending. In this financial year, these key tenets of our strategy also saw us build capabilities throughout our business that enable us to have sustainability going forward. I will touch on these a little bit more later. The divisionalization of Grindrod Bank and the acquisition of Sasfin's commercial property and capital equipment finance is also a significant step for us in FY24 as it speaks to, again, these capabilities we're bringing in terms of asset-based finance, capital equipment finance, a much fuller commercial property offering for entrepreneurs, for businesses that we support in business banking and commercial banking. With the bringing on board of Ubank and Grindrod Bank and choosing a mono brand that is African Bank, we're delighted that we could refresh our brand to cover these markets and speak to the different audiences that we now serve. The refreshed CI in terms of our brand, the introduction of a new brand ambassador, all of these, I think, have just rejuvenated the franchise in the eyes both of our people, stakeholders, and of our customers. The journey for the IPO started in earnest for us in FY24. We decided that it was important, having received feedback from the investor community, that it was important for us to de-risk the ultimate IPO by one, selecting and concluding a deal with an anchor shareholder for the bank going forward. This would be the Government Employee Pension Fund and represented by the PIC, but also take a key step in having secured an anchor shareholder for us going forward, also do a deal for our employees, 10% transaction that resulted in all of African bankers, despite tenure, seniority, to be equal shareholders of this bank to the up to 10% of the company's shareholding in a scheme we called Ikamva Lethu. Ikamva Lethu, this employee share scheme, enables us to speak with a lot more meaning when we say this African bank is indeed a bank for the people, by the people. We'll talk a little bit more about next steps in terms of this pre-IPO that is now extended into 2024, 2025 to ensure that when we do ultimately list, we list very successfully. We've invested significantly this year, as I've said, on both our middle and back office, and in particular in the maturation of our compliance culture. These are key milestones that are really the bedrock of our successful execution of Accelerate 25, ensuring that here we have a bank that is increasingly got capabilities that are scalable. It is a bank that is resilient and a bank with sustainability. But the lenses that we prefer to use when we look at performance are really sustainability levers. It is these windows of checking performance according to customer satisfaction, social responsibility, financial resilience, inclusivity, and environmental protection. Our sustainability levers enable the group to achieve long-term sustainability across all areas of key focus for shareholders, stakeholders going forward. And so let's just dive into some of these very quickly. We are a bank that is building a franchise that is customer-centric. And so it is important to start looking at performance with the lens of customers. We're delighted that at African Bank, when we started this journey of Accelerate 25 in 2021, we only had 1.1 million customers. We're reporting today over 5.4 million customers served in our franchise. And here is not just an obsession about getting as many customers as we want. Our obsession is very clear. It is about active customers every month. Customers that buy services and products from us every month. Those we have increased from 1.1 million when we started in 2021 on this journey to now 5.4 million customers. Those customers' Net Promoter Score continues to rise, and those customers have had a profound impact on the business that we are today, moving from just less than 39% of our percentage of customer deposits as a mix of our pool of deposits in 2021 on to today over 92% of the percentage of retail and business deposits being part of our overall pool of deposits. This bigger pool of deposits influenced by our customers is also got a much lower cost of funding for us, enabling us to support the franchise that much better. The second and equally important lever is how we impact the communities that we interact with. It is the license to do business for African Bank to be a credible contributor to our communities. And as such, the group is committed to advancing the social economic conditions of our communities, and we sit in FY24 already exceeding the targeted cumulative CSR hours spent on our communities' activities. I take my hat off for each of our 4,500 colleagues who demonstrate their buy-in for what this business is about in what they do, in the hours they put out there, not paid, but helping advance our communities. The other lever, of course, is financial resilience. And whilst Anban will take us through a lot more detail on this later on, it is important for me to note that the work that we've been doing, particularly in acquisitions and integration and acquiring capabilities, whilst it's enabled us to register solid financial performance as reported today, it has also had an impact of derailing some of our loftier objectives in terms of net profit after tax, return on equity, and cost of income as we build the franchise for longer term profitability going forward. We've made better advances in the financial resilience lever with respect to net advances, with respect to common equity tier 1, and ensuring diversification of our income streams, improving our non-interest income as a percentage of total expenses. No company worth its salt today will speak about longevity without speaking to inclusivity and the environmental imprint that it has on our planet. The group has maintained its BE Level 1 status even after acquiring diverse businesses such as the businesses we've acquired from Sesfin Bank, Greenroad Bank, and Ubank. Further focus on enterprise supply development and procurement spend has enabled us to exceed targets, not just for 2024, but in fact exceed targets even for 2027. Our carbon emissions target is rebased following the acquisition and integration of various operations in the group. But again, we continue here to be above our own plans in FY24. These sustainability levers, as I've said, they speak about performance really from a holistic point of view. Performance of a business beyond just a single bottom line. It is, in our minds, the sustainability levers that speaks to our multiple bottom lines and contribution in enhancing lives. But all of this, ladies and gentlemen, would not be possible without the particular contribution of African bankers. Our people are the very lifeblood of our compelling vision and strategy implementation. And I'm delighted that this year, once again, for a third year running, we've been awarded the top employer rating. And given the very tough operating environment we are in, given the many complex situations that colleagues in financial services, but also people in South Africa face, we're delighted that we successfully piloted the mental wellness program in some of our business areas. We rolled it out for the rest of the bank into the latter part of FY24 and 2025. And in doing so, we provided executive wellness services for our leaders and areas that were under strain, to the point of attracting another stellar recognition as the recipients of the Best Health and Wellbeing Strategy by the Future of HR Awards this year, contributing to the wellness of our people. Another important part that our people are really playing a key role in is in making sure that we together, as colleagues from the old African Bank, Grindrod Bank, Ubank, now new Sesson businesses, we together work at ensuring that we build a common culture together. I've said this before, that culture eats strategy for breakfast, lunch, and supper. In our view, culture is actually the secret sauce for successful integration. And that is why we believe in focusing our people on driving the same culture, coming up with what it is that are shared beliefs, shared artifacts, the kind of values we wish to show up with. We are doing more than just forming a common culture. We are really forming a set of common rules for all movement makers, whatever their background has been. And this year, we're delighted that that culture journey was strengthened by 3 master classes, and the one most memorable for me, of course, being one that was hosted by former President Thabo Mbeki. In driving one culture, we are ensuring that even the acquisitive strategy is subjected to this secret sauce in integration. Before I call on my colleague, Sibong Seni, to take us through personal banking, I also do just want to double-click on an emerging important capability within the bank. A key part of the Accelerate 25 strategy was not just in strengthening the core of what we've got, but also expanding to new businesses. We had said we're going to expand the core via getting into business and commercial banking. This is something Zweli will speak about later on today, but also through ensuring that at African Bank, we build a partnership-led business with fintechs, with non-banks, financial institutions, with telcos and retailers that expand the bank's reach and adds value to both our partners and our customers with the capabilities that both our partners and ourselves have. We've selected, and we are delighted to also have been selected by 3 key partners in this journey, being Lisaka in our mass distribution and payment space, and in ensuring that we reach that last mile in terms of social grants payments and similar type banking by the millions. Our partner in Shoprite Checkers, this has enabled us access into retail franchise and capabilities that Shoprite Checkers has. MTN, Mobile Momo, we are again their partner in South Africa for Mobile Momo, really stretching our own capabilities into telcos. We're able to become the go-to partner for these important franchise enhancers because our client value proposition in alliance banking is about being trusted, is about being a strong partner ourselves, it is about being creative and co-creating together, and also it is about being platform enabled. At a time when banking throughout the world is being stretched by the entry of new technology providers, of telcos, of non-bank type players, we are delighted that in our own strength and capabilities, we are a key bank sponsor in this market. We've got interoperable payment capabilities, and we've got a strong banking back office that supports our partners, and we are a bank that is increasingly ecosystem driven. We've also been deliberate that in entering these partnerships, we, as a highly regulated institution, we are a bank after all. We need to ensure that we partner well with our partners to ensure the highest level of banking compliance, risk management systems, processes, and culture. Delivering on this capability is something that enables us to grow our customer franchise and our capabilities at a time when customers aren't worrying about any bank. They are worrying about their banking journeys. We will continue to expand these partner of networks to ensure that we are the go-to for customers in their banking journeys and financial transactions. I am now delighted to call on my colleague Sibongiseni to cover how the personal banking business is delivering on Accelerate 25 and contributing to the financial results we're reporting today.
Thank you, KGB. Good morning, colleagues. What I'm about to cover is the journey that personal banking has embarked on over the past year. The personal banking strategy and execution roadmap has been underpinned by 4 key themes. The first one of those themes is really placing laser focus on transactional growth and improving our transactional quality. How have we done against this? We've really accelerated the growth of our transactional franchise, underpinned by My World, from 1.7 a year ago to just over 2.6 this time around. And this has given us the ability to entrench our digital offering, to improve the usage of our transactional offering, and of course unlock the underlying non-interest revenue streams at the back of enabling of our customers. We are pleased with this achievement because it signals what we've always promised, that the core essence of building a successful retail franchise will be underpinned by a strong transactional franchise. The last time we reported, we also indicated that we were taking a slightly nuanced view around unsecured lending. So we slowed down the growth of unsecured lending and pivoted towards secured and purpose lending. We now have a portfolio of device lending that we are continuously growing with our partners. We've also commenced lending in the form of home loans, which is really the first thrust of building our secured offering. We're pleased that having gone through the first phase of that offering, we have passed the 100 million rand book milestone, which is really from our own staff lending. Looking ahead, we've also improved our funding base. We've been growing our deposit base, and we've now crossed the 19 billion rand mark in terms of customer deposits. And this, for us, is really a pleasing milestone and indicates our commitment towards diversifying our funding sources. Finally, we have also focused on building our lines of defense in our business. We've invested in new capabilities. We've invested in first, second, and third line capabilities. And long term, we continue to manage our business within the risk appetite, both internally and also looking at enabling our customers by providing solutions in terms of collections, making sure that we offer solutions for our customers in distress, and we work with them in terms of supporting them through the tough periods that our customers go through. All of these things, of course, have been augmented by core capabilities, which is investment in data science and analytics, investment in customer fitness, and also making sure that we build new customer processes that allow for customers to do business with us in a seamless, frictionless manner. And at the back of that, we've built our rewards and loyalty program. And we've built partners at the back of that to enhance our offering for customers that use us as core. And as you will see later when we unpack our results, this has really paid quite significantly from us in terms of stickiness, in terms of transacting behavior, and we're seeing growth both in transactional volume and non-interest revenues. Turning to some of our key achievements, the first theme really that I'd like to focus on is on strategic diversification. The first area is about expanding our offering and capabilities, and I'll talk to that in the next while. The second area is improving our portfolio of products so that we build a retail bank that's just no longer about unsecured, offers transactional capabilities, and also all the value-added services that are critical as our customers realize their core purpose and aspirations in life. We've also enhanced our insurance offering. Our insurance offering now goes beyond just the simple offering, which was our first funeral product. We now have expanded the family funeral offering through our partners. We've also got a almost schemes offering that allows for people who are running key partnerships, groups, and stokvels to also access our funeral offering product. Our loyalty and rewards offering has actually won international awards recently and has surpassed the 1 million mark for customers who have signed on and are actively engaged with our loyalty program. And we are pleased about that achievement. In line with the focus on improving our retail deposit base, we have now reached the 19 billion rand mark in core savings and term deposits. We've taken the opportunity to also look at growth markets that are critical in building our franchise. And we are pleased that we're seeing a lot of traction on the new proposition where we are backing career starters by really solving some of the key things that get in the way: accommodation, mobility, and finding a bank that really backs you through that journey. And the uptake on that product and offering is really pleasing. And so we'd like to see more of this in the next season. In terms of the partnerships that we are building for largely purposes of making sure that we bring financial and related services to markets and segments that are currently underserviced, we've recently concluded a relationship and partnership with SASSA to distribute the new SASSA SRD grant. And this will enhance both inclusion, availability of financial services, and set African Bank as a key player in those segments, because we believe that inclusion in financial services is important in our country. Turning to my world, we've seen a significant increase in NIR. There's continued usage of our transactional product, And as you will see later on when we talk about our core earnings, we really are pleased how this growth in the transactional franchise is driving non-interest revenue for the bank. Customer growth underpinned by digital adoption has also been a significant achievement for consumer and personal banking. Looking ahead, we have identified 6 key focus areas that will continue to drive. At the core of enabling customer journeys is to really fundamentally transform our business by investing in digital capabilities, transform our business, and ensure that we make it seamless for customers to interact and do business with us. We also will be accelerating in the next year ahead our secured offering, both in housing and looking beyond just housing to venture into vehicle and asset finance. We're expanding our insurance vertical to go beyond just funeral to also look at products that are medium and long term. Our customer centricity, underpinned by investments in AI, underpinned by investments in analytics, is also a great focus for us going into 2025. Of course, we have to expand our segments. If we look at the work that we've been doing within our business, largely we have been a lender that's now evolved into being core, and we are seeing new emerging segments that are critical to underpin our growth. Some of those segments is underserviced segments. Some of those segments is the student market, the career starters, what we call first jobbers internally, and we have built solutions that will then go into servicing those markets. But with a clear focus that actually we exist so that we serve both the underserved and the underserviced markets from a product capability point of view. We are pleased with these results, and we really look ahead to continuing the momentum that we have started as part of our Accelerate 25. At this point, I'd like to invite my colleague Zweli to cover business and commercial banking.
Thank you very much, Sibo. I'm going to be talking about the work we're doing to create business and commercial and how much progress we've made and what are the next things that we want to do. If I just go back to say, this business and commercial banking is actually an African bank strategy to expand the core. We're doing that by building a fully fledged middle of the pyramid business banking that will offer beyond banking services. It will be digital at its core, and it is an ecosystem driver. If I look at what exactly is it that we're serving in terms of segments, we have decided to go middle of the pyramid, and the rationale for that is you have got a lot of underserved and unserved customers in that. And we deploy various channels to manage these relationships with our entrepreneurs. We've got a relationship banking channel, which is traditional RMs who actually go and understand the customer deeply. Having understood the customer deeply, they navigate for solutions inside the organization. We have got a direct banking capability in our channels that is actually intended to make sure that entrepreneurs do not necessarily have to come to the bank. They must focus on running their businesses, and they must access the bank as and when they would like to. And the last channel that I'm going to talk about, which we have, is at the bottom of the pyramid. We understand very clearly that you can't be acquiring customers on a one-on-one basis. You got to go into an ecosystem. So that's why we have got what we call ecosystems banking. Of course, we are continuing to work on delivering our digital capabilities insofar as internet banking is concerned, as well as a banking app that our customers are going to use. And then the one thing that, as a matter of philosophy, we do is instead of banking entrepreneurs, we would rather partner with them. We partner with them because We want to make sure, especially in the rural and township economies, we want to make sure that we have got access to banking solutions that enables them to participate in the GDP of the country as well as contribute towards economic inclusion. What we've done in 2024, just by way of giving you an update on progress, we had spoken before about acquiring a commercial property finance business from SASFIN. That was successfully done, and we integrated it already in this financial year that we're talking about. But we did make more progress in the sense that the capital equipment finance business, whilst it was not closed in the 2024 financial year, was closed at the beginning of November. So we now have got a full suite of capabilities that will add even more to our proposition to our customers. What we also have decided to do is, because African Bank is a national brand, Business and Commercial has got to follow suit. But without rushing ourselves, we have decided to expand our capabilities into Western Cape, and we will be recruiting RMs and CPF specialists to make sure that we can serve that market, because that market is very lucrative for us. The last piece I want to talk about is, of course, we are continuing to build our transactional banking capabilities. The first phase of that, which is going to be internet banking plus a transactional account, we're going to deploy that in the market in this financial year, potentially by the end of March 2025. We will be going to the market with the first phase of it. Of course, we want to mature that over a period of time so that we are comfortable that those of our customers who are complex in their requirements can actually still be addressed in terms of the platform as we enhance it. What we're also doing is just trying to improve access to credit. Because when you talk to many, many people, you'll hear that access and the ease of access to credit is an issue. What we're working on is automate as much as we can the entire value chain of credit. And the second piece that we're doing is we'll be deploying a scored lending capability, because it's not always necessary to go through intuitive processes where you look at balance sheets, you can actually score the customer upfront and let them have a limit of credit that they can utilize to grow their businesses. And of course, I'm very proud to say that the digital lending business that we've been talking about for quite a long time is actually commencing to really ramp up from a build perspective after we got the approval from the PA to go ahead and partner with FinTech. That promises to actually give very quick turnaround, 24 hours, for credit up to 5 million. And of course, the other thing that we've always spoken about is there are these tasks that entrepreneurs must actually engage in, which are non-core really. Tax, for instance. They have to make sure that they are compliant and they submit their returns as quickly as possible. What we're doing is creating a shared platform. This platform is going to be used by these entrepreneurs who can actually outsource all of these administrative tasks and focus on growing their businesses. So insofar as that is concerned, I'm very happy to say to you, when we launch what I call internet banking next year, we will have accounting services as part of it. We will have payroll, which will include UIF. We also are going to enable our entrepreneurs on a mobile basis to be able to issue quotations as well as invoices. So we actually are looking forward to what will be further steps to make sure that we enrich our capabilities to be fully responsive to our customers. Perhaps the one last thing I want to say is that the acquisitions that we have done were not done for acquisition's sake. It was to strengthen our capabilities. As an example, we never had development loans. Now we do have. We never had installment sales, rental finance, as well as leasing. Now we have. Both of those come with the acquisitions of the two SASFIN businesses that we actually bought. On that note, ladies and gentlemen, thank you very much for the opportunity to talk to you about our progress in the building of business and commercial. We will, of course, next time around, come back with more progress that I'm comfortable we would have made. And I would like to hand over to my colleague Anban, who is going to take us through the financials.
Thanks really for that update on business and commercial, which is really some exciting things are happening there. I'm just really pleased to present the FY24 full year financial results, which has really shown a steady financial performance in a tough economic environment. But what's exciting is that we're coming off a diversified balance sheet. And as you just look at our balance sheet, you can see that we've grown 15% in business and commercial while having muted growth in personal banking at just 4%. However, overall, our net advances has grown at 8%. What's other part is really exciting is our funding diversification. We now have 92% of our deposit franchise coming from personal banking as well as business and commercial. Then looking at the financial performance, I'm really just going to focus on a few of the items as I've got much more information in the coming slides. If we just got to look at the net interest income as well as the net interest margin, they are down year on year. However, that's deliberate as we focus on growing our book into more secured products that gives you a lower interest margin as well. Then moving on to the credit loss ratio, it's at 6.3%, coverage ratio at 24.2%, and overwhelmingly, the credit impairment charge is 20% lower year on year. All that translated, we end up in the non-interest revenue up 14%, insurance income also up 14%. And as we were in a tough macroeconomic environment, we've tightened our operating expenses lower than last year at 1%, and all that translates into a cost to income of 58.7. All that put together, we end up at a net profit after tax of 523 million, and that results in a capital ratio of 31.4%, really primed for growth, and an ROE of 4.3%. Then moving on, we can see how the solid operating performance, we expand into the net profit after tax of 523 million. And what's really exciting, as you can see, our net revenue after credit impairment charges being over 8%, which is really positive. And then when you move on to our active customers, growth of 36%, all our business units have been growing. What's pleasing is in personal banking, having that 17% growth, really what it means is we've got more clients, more products to cross-sell, so really good platform to have 5.4 million clients on our platform. And moving on to the net profit after tax waterfall, we'll just start with the key movements. We start on 521, starting point of FY23. Then we move on to the bargain purchase price of 276 million. That was in our FY23 financial year. Spoke about earlier in terms of our net interest income being lower as we diversify that balance sheet. But what's really pleasing is that growth in the non-interest revenue as well as insurance. The highlight of the year is really being that lower credit impairment charge. And we'll spend more time later on in the presentation. Moving on to that, in this tough economic environment, we've tightened our OPEX spend, effectively spent less in FY24 than last year. And all that translates into our FY24 ending point of 523 million. Now, if we move on to that intentional balance sheet diversification and looking at how business and commercial was at 8% a few years ago, now it contributes 38% of our net advances. Great amount of growth coming through from business and commercial. And now as well, even in the last financial year, has grown 15%, while personal banking's net advances has grown 4%. Then if we move on into the personal banking disbursements, what you can notice is that we've tightened our credit granting criteria, been flat year on year, being almost about 9.4 billion. However, when you look at the demand for credit, that has been there. You can see we're getting over 100,000 applications per month, still maintaining an offer rate around 30% and a take-up rate of 55%. Then moving on to the hybrid distribution network, I think that's key to understand our 436 branch network is critical for us. As you can see, 70% of our applications are coming through that branch network. And the remaining 30% is coming through our call center as well as the app, which is effectively the branch in the pocket. Then moving on to the asset mix and focusing on the net interest margin, as I mentioned earlier, lower year on year, but really deliberate as we focused on moving into more secured products that attract a lower interest margin. Then if we just move on to the diversification of our non-interest revenue, this is for me has been a really exciting piece. As we've acquired more clients, we have more clients that are transacting, we have more clients that are effectively calling African Bank their partner of choice, which is fantastic. You can see that growth of non-interest revenue over 1.5 billion and growth of 14%. And if we have to move in and zoom into specifically on our My World transactional accounts, over 1.7 million funded accounts, and look at that growth of volume and value of transactions. Really exciting times for African Bank in growing our My World account as well. Then as we move on to insurance, you can see we've now applied IFRS 17. What has definitely come through is that as we slow down and been more muted in our personal banking, unsecured lending, you'll notice our premiums have reduced. However, we've also benefited from lower claims as well. Overall, insurance up 14% as well. Now I'm going to move on to more focus on the credit loss ratio of the business. What's really exciting, overall as a group, 6.3%, down from last year of 8%. If we have to zoom into the business units, personal banking down at 7.6% from 10%. However, you'll notice business and commercial increased to 2.3%, and that's really due to a single counter in the transport industry that we've taken a large provision of over 250 million rand. Then as we zoom into personal banking's credit loss ratio, what's key to look at is when you look at the ECL of the existing book, significantly lower year on year. And that has come through as management has focused on credit risk management initiatives, but doing much more in terms of the granting model, our collection treatments, call centers, great amount of effort from that team. And that results, as you'll see, that ECL down to 7.6% from 10%. If we have to move on to the coverage ratios, once again, overall lower, great amount of work being done in personal banking once again. We spoke about the blip in the business and commercial. That's increased on the stage 3, really to that single counter coming through from the transport industry. If we move on to the NPLs of the business, this is always a key focus to look at. What's really pleasing, down from just under 36% down to 33%. If we have to look specifically into personal banking, now it's reduced to almost just under 38% from being at the high of over 42%. So really pleasing. Business and commercial, slightly up as we've spoken about the single counter that we had in the transport industry. What's really key when you look at ECLs or you look at credit risk, we always focus on what is happening in our current book. And what's really pleasing is you can see we've moved away from the peak that we had in FY22, looking much better, and we expect to see that benefit flow through into the coming financial year as well. Then as we move on to the financial position, what is really exciting here is that we've grown the balance sheet to just under 50 billion. If you look at FY22, we're a bank under 30 billion. Significant amount of growth has come in from our balance sheet. And if we have to move and look at our funding, funding is really exciting. 92% of our funding is coming through from personal banking as well as business and commercial. When you look at that gray block, the gray really speaks to the wholesale funding, and you can see over time how we've reduced our reliance on wholesale funding. So really exciting as we grow our balance sheet as well. If we zoom in specifically on wholesale funding, what's been really, really positive for the bank is as we've tapped into the capital markets, the rates and the spreads have reduced, which is really exciting as the market has seen us improving our balance sheet and improving our performance. We've done 2 issues of our Tier 2, just over 1 billion, and it was done at JIBAR plus 450. Really exciting to get into that. And overarching all that, our cost of funds was 7.9%. If we have to move on to capital, really positive and pleasing. capital ratio of 31.4%, well above the regulatory minimums, but that ratio has us primed for growth coming into the future as we look at opportunities that come across our desk as well. And now, just in closing, what has been the key takeouts from a financial position perspective? We've definitely seen modest in terms of the net advance growth, but really speeding up in business and commercial, slowing down in personal banking, very, very deliberate. Improving in terms of our quality of our balance sheet. What's really pleasing as well is having over 7 billion of surplus liquidity. That has us ready for future growth as well. I just spoke about the strong capital ratios, and that definitely sets us into a good position into FY25. Then looking at our financial performance, what's key here is that we spoke about the reduction of our net interest margins declining. That is deliberate. As we move into secured products, we expect that to happen. What's been really exciting is the acceleration of our client growth, having 5.4 million customers on our platform, and that is giving us the benefit of the growth in our non-interest revenue as well as insurance. We also kept our OPEX very tight in this tough economic environment, and overarching that, we are constantly monitoring our credit risk management to ensure that we can contain our impairments as well. Thank you so much, and I'm going to hand you back over to KGB.
Thank you, Anban, for that presentation. Now, looking ahead. I indicated earlier on how the evolution of our strategy, Accelerate 25, from co-creation in 2021 to entrenching in 2022, integration of acquisitions 2023 and 24, and what we've achieved this year. In 2025, we really are looking to double-click on consolidating the recent acquisitions and new capabilities built in the diverse businesses that we now have, so that we can extract value from our bigger customer franchise. Part of this consolidation in 2025 will see us in personal banking expand on our purpose lending, tech device lending, all capabilities that we already have now. It will also see us expand on the 100 million of staff home loans that we've written this year to use partnerships to expand that offering to our customers in home loans and vehicle asset finance. So really taking capabilities that we've built, borrowed, and bought, and ensure that we deploy them to our entire customer base in personal banking. In business and commercial, we'll be looking to ensure that the capabilities that we now have with the asset-based finance capability, the much fuller commercial property capability is deployed throughout our customer base. Zweli, as he indicated earlier, we are excited that we'll be launching our digital lending capability to entrepreneurs and small medium enterprises this year, and also backing all of that with a winning business transactional services account to seek to have the same benefit that we now have in transactional revenues in business and commercial that we got in personal banking. We continue to ensure that our alliance banking capabilities that I spoke about earlier are expanded to new partners beyond just Mobile Momo, Lesaka, and Shoprite Checkers to enhance our offering as a go-to partner for fintechs, telcos, non-bank financial institutions in journeying customers better throughout their financial transactions experiences. Our insurance offering is up for an upgrade this year beyond just funeral and credit lending, but also to ensure that our customers get a much fuller insurance coverage as they journey with us at African Bank. The other aspect of capabilities that we are consolidating in FY25 is, of course, how we support the frontline and customer franchise through better operations, a much faster and stable IT system and infrastructure, and ensuring that our end-to-end risk management is up to scratch, and the maturation of our compliance culture. We spoke about how in FY24 we started the pre-IPO journey in essence. We'll be double-clicking on this in FY25 by ensuring that in partnership with our anchor shareholder, the GEPF, we address issues of management alignment and address issues of BE ownership of the bank. It is an important North Star for us to be able to take this bank's ownership back to black entrepreneurs who founded it in 1964. Of course, all of these things are done so that we are able to meet all of the key financial ratios that will position us ahead of 2027, 2028 with compelling listing proposition for incoming and current shareholders. And so we continue in FY25 to look towards progress in the implementation of our Accelerate 25 strategy and ensuring that we drive profitability to the levels such as planned, both in terms of NPAT and higher ROEs than we've been able to achieve in the build phase of Accelerate 25 over the last 2-3 years. The divisionalization of Grindrod Bank and bringing in of Sasfin Bank's capabilities that have taken place are an impetus for us to have a much bigger contribution from the business and commercial franchise in this year. We've spoken about how this year we'll also be double-clicking on a phase 2 of our pre-IPO, working with our current shareholders, and in particular the GPF, to ensure that we've got management alignment with the incoming shareholders, and also a BE scheme that would enable us to remove any overhang in our ultimate listing post-2027 and ensure that we safe-proof our listing when the right time and market conditions permit. The new CI that reflects the growth of our business beyond retail into the business and commercial space and franchise will be supported once again in FY25 as we build a strong brand with a brand equity that's got a clear return on investment to the group. Our investment in strengthening our end-to-end risk management and compliance capability is not a nice to have. It is a must-have when we are building a bigger franchise such as we are. And this investment will continue in FY25. The improvement in outlook, particularly in terms of the rate cycle in South Africa and globally, the improvement in workouts for households and companies, and promised higher growth in GDP in South Africa in FY25. All of these together, of course, with improvements in a stable supply of electricity, really present an opportunity for much better credit extension and much better growth in FY25, and African Bank is best placed at this time to support its franchise through the new opportunity that FY25 represents, better than what we've seen in 23-24. In conclusion, with every successful milestone, every definitive step that we've taken towards achieving this compelling vision of a bank for the people, by the people, serving the people, we've done so embracing the beacon of audacity. That idea that resonates from the heart of every African banker. We see ourselves as stewards of a legacy that continues to change lives for the better. Nearly 50 years after the first African Bank branch was established in Ga-Rankuwa, we continue to be inspired by this beacon of audacity. In a year where we laid to rest our founding chairman, Dr. Semo Sonyane, we stand here better placed to carry the torch, to carry as faithful and good stewards those ideas that defined his generation of African bankers. The idea of enhancing lives through financial services. African Bank is today more resilient, more sustainable, more diversified, a fully fledged personal, business and commercial bank that's a trusted partner by over 5.4 million customers that interact with us every month. We continue to draw inspiration from the feats of audacity as we partner and we support a new generation of go-getters, disruptors, and leaders on a path to a prosperous South Africa. Thank you very much.
African Bank, audacity to believe.
Thank you, gents, for joining me back on stage. We've got an opportunity for you to help me field some questions and answers from our audience. The first question says, please clarify how your journey is tracking towards the IPO. I'll field this one for you guys as you warm up. Well, as indicated in my presentation, the journey to the IPO is really on track. We took some big milestones this year by employing global investment bankers to help us engage with investors. We spoke to just over 28 investors in the banking sector in this country and overseas. And the feedback received from there, we shared with the board and shareholders, and basically got us confident that what is expected by prospective shareholders and investors for African Bank at the time of listing is that one, we need to have bedded down the acquisitions that we've acquired. We need to have demonstrated performance on all the new engines and of capabilities that we've brought. And so with the acquisition of Ubank and Grindrod Bank, 2022-2023, the acquisition of Sasfin Bank's key businesses in 2024, feedback was very clear. We need to give ourselves time to ensure that we perform in all of these new capabilities in business and commercial and in personal banking so that the incoming investors actually know how to track us and know how to understand the business we've diversified to and what its promise is for them as investors. That was one key part of very important feedback we received in terms of our IPO journey. And that is why we're spending a lot of time in FY25 consolidating all that we've done in growing the business in these capabilities. The second important piece of feedback we received from prospective investors is that we needed to try and avoid, if we can, this overhang of BE as and when we list. In other words, we've got to make critical decisions as to whether the current shareholders or new ones need to bear the brunt of doing the right thing in terms of aligning staff and management with the new long-term investment horizon of the bank, and whether the new or current shareholders need to facilitate the BE of the firm, something that is important for our license to operate in South Africa. We took a very clear decision that it is an engagement with current shareholders that we must ensure this alignment, this de-risking of our IPO and removing a BE overhang at ultimate listing. And that is why we're so chuffed that we've been able to announce an employee share option scheme, 10% ownership of the bank by all colleagues in what we call the Ikamvaletu scheme. Secondly, we are delighted that we're able to confirm the GPF, as represented by the PIC, its asset manager, as the anchor investor for us beyond even listing, and work with them in then doing something about a BE scheme for Black entrepreneurs and Black women, all really taking into account this important work of de-risking the ultimate IPO as and when we list it. Of course, the other unintended benefit of doing this is that we reduce the amount of listing that we're going to have to post of our shares as and when we list post 2027, making the listing itself not so much a destination, but an important milestone in the now much more well-managed pre-IPO and IPO phase of replacing shareholders with much more longer-term shareholders going forward. We made huge progress on this year, and further announcements around the BE retail scheme and the management scheme will be made in future dates. The last and important piece of feedback received from investors, which we've taken to heart, is that we need to ensure that we wait for a window for listing on the Johannesburg Stock Exchange that is at a time where the market is conducive and buy-side investors are ready. And so we're looking at those windows. We think at this time that will be after the back of our full year 2027 financial results, but we will watch markets with our advisors and the board and shareholders going forward. And so it's a long way, but maybe an important explanation as to the pivot we've taken in making sure that we safeguard, we safe-proof and de-risk the IPO as and when we have it. The second question is around staff home loans, Sibongiseni. The question reads, staff home loan book of over 100 million. What are the plans to start offering this to your customers?
Thanks, KGB. We have really spent time shaping the core capabilities that are critical for us in personal banking as part of the group journey to diversify both our offering, our products, and our solutions to our customer. And so the last 6 months, we have rolled out our proposition, our housing solution to our staff. And largely, the main reason really for starting with a limited test and pilot was that we wanted to ensure that our processes, our capabilities are robust enough to allow us to take those to market. So at the end of the first quarter in 2025, watch the space. We're looking to really make key announcements about going into the bigger retail market.
Exciting new capabilities for our franchise and for our customers. Looking forward to that as well, Sibongiseni. The next question is, and I quote, please expand on your planned transactional business capabilities, close quote. I think this goes to both you, Zweli and Sibongiseni. Do you want to get going, Sibongiseni, particularly the milestones we registered this year on the transactional banking front, and then what's coming from business and commercial?
Yeah, if we look at the journey that we have traveled in terms of our transactional scaling, you'd recall, if we look back about 3 years or so ago, we were sitting at about 800, 900 transacting customers within personal banking. We've expanded our transactional reach to also enable those of our partners who are looking to provide banking and transactional capabilities. So if you look at now what we call customers on the platform, we are beyond the 5 million customers mark. But coming back into personal banking, we have really evolved our initial My World proposition. And the way we've done that is, one, to look at how do we repurpose it to largely do what we call household banking, so that if you're a parent and you're looking to bank yourself, your partner, your spouse, your children, we provide what we call wallets, which are really repurposed transactional capability that allow at the back of this core anchor relationship that you facilitate banking also for your children. We've built our digital capabilities. Today, we're proud that beyond just having an app, we have built our bot, which allows and enables for our customers to engage with us wherever they're at. It makes for seamless interaction. But actually, we've geared our engine to go into the spaces where we've always understood that an offering such as we stand for is critical. So that's seen growth of about 20% year on year in the transactional franchise. And we are proud about that engagement. And if you look at some of the results that Anban shared earlier on, that's really adding back into this growth in core earnings from a non-interest income point of view.
Lovely. Sibongiseni, I think that was actually quite a big highlight for us this year. 1.5 billion rands of non-interest revenue, 812 million rands of funeral fees. We're nowhere at the start of this strategy with respect to those numbers. Really wonderful diversification of our revenues and de-risking of the balance sheet. Well done to the team, and well done for over 1.7 million of our customers and transactional accounts that are funded, a 68% jump year on year. We look forward to growing this. This is the real exciting part of banking. It's beyond just lending our balance sheet. It's beyond just lending. It's real walking the journey with customers through their financial transactions and therefore through their lives. Well done. And what to look out for as well in business and commercial?
Thank you, KGB. We're working on quite a lot of capabilities insofar as the transactional account is concerned, as well as the front end or for internet banking. So we're looking to launch all of this in the first quarter of the calendar year next year. And then later on in the year, we are going to mature it. So we look forward to banking quite a bit and contributing towards the NIR.
Wonderful. The next question is comment on the quality of earnings in this set of results versus prior year. But I'm keen to hear your views on this because, looking at 523 million of NPAT versus almost the same amount last year, just shy, a slight increase from last year, but 5 billion rands of total income before provisions, or rather after provisions, 9% increase. 9% increase in total income looks great, but what is the real quality of these earnings in your mind compared to last year?
Thanks, KGB, for that. I think what's key in the quality of earnings when I look at it is although last year to this year, you can look at it as being flat. What's key is in FY23, we did benefit from a bargain purchase price of 276 million. Mm-hmm. When you look at FY24, albeit we've had lower interest income due to the muted balance sheet growth as we move into more secured products compared to the unsecured. What's really been pleasing for myself is seeing the non-interest revenue grow by 14%, combined with the insurance income up 14. And that speaks to our growth of customers being 36% up at 5.4 million. Combined with that, I think what has really been pleasing in terms of the quality is our credit impairments has reduced 20%, which is a significant improvement given all the credit initiatives that we've been doing in terms of not just the granting model, but certainly in terms of our collection strategies, in terms of treatments to help our clients, as well as gaining efficiencies in our call centers as well. So that's really been a key highlight. And even during the year, in the back of the tough tougher macroeconomics, our operating expenses actually lower by 1% year on year. So although the earnings is 1%, just flat year on year, we've really done really good to have a much better set of quality of earnings for FY24.
Thanks, Anban. The next question is, you mentioned capabilities with continued diversification of revenues. What other acquisitions are you planning for the near future? Sibongiseni and Zweli, you touched on this in your presentations about these new capabilities. Do you just want to double click on that and what this looks like in the near future? What new capabilities in serving customers in personal banking, business and commercial? Do you want to get going, Sibongiseni, and then Zweli?
Yeah, KGB, really the best way to look at how we think about the core capabilities is we've adopted an approach which we call design thinking. And that's really walking through the lives of our customers, understanding in order of priority what problems they're trying to solve. And therefore, when we think about capabilities, it's a balance on what do we build internally, which partnerships do we leverage, and how do we then orchestrate on our platform? So if we look at the first of such partnerships, we've already mentioned our housing solution. If you then look ahead on the next big horizon, underpinned by diversification of our balance sheet with a clear focus on secured lending, we would be looking to build a vehicle and asset finance capability as our next horizon. So there's a huge swing towards really building secured lending capabilities and completing what is the core offering of what a retail bank should really look like.
Very exciting stuff. And we could see that with the significant increase of secured lending at a time when unsecured lending actually was flat year on year. So very exciting. And unfortunately, as Anban indicated, that does introduce a bit of tightening in the non-interest margin as a consequence, really, of this strategy to de-risk our lending book. Hopefully, we'll benefit then from the credit impairment charge as you drive that forward. Zweli, you speak a lot about the fact that we don't just go and buy stuff. We obsess about bringing in capabilities. Do you want to double click on this and what has this meant in terms of both the acquisitions of Grindrod Bank and the businesses of Sasfin Bank that we've acquired?
Thank you, KGB. The Grindrod acquisition gave us the platform on which to build. They had investments, or deposits rather, and then they had very good capabilities insofar as commercial property finance. What we have done is add more capabilities insofar as building loans are concerned, as well as capital and equipment finance, which gives us installment sale, rental finance, and leasing. All of these actually give us a much, much better proposition for our customers. We do, however, still have to find trade and data finance as an example, and we're working very hard on that. So insofar as new acquisitions are concerned, no, I'm not aware of any.
And I mean, I like that, Zweli. The point for me being that we really are trying to serve our customers fully in terms of all their financial services needs. And it is growing the capability to serve them or borrowing it or buying it or partnering for it if we have to. And that is the drive. The drive is what we do as a go-to partner for customers. We do enjoy strong capital and strong liquidity resources that gives us optionality as to whether to build those capabilities ourselves or acquire them if they're available on commercial basis in the market, and we're not taking that option off the table as we continue to build a customer-centric, data and digitally enabled bank that is diversified, that is got capabilities that are scalable, and a bank that is a fully fledged personal, business and commercial partner to SA Inc. So thank you for that response, gentlemen. We look forward to these capabilities, and I'm sure that our customers do too. The next question is, you touched on economic growth and inclusion for SMMEs and entrepreneurs. What are some of the initiatives that you have put in place for this sector? Zweli?
Earlier on, I spoke about scored lending. That is going to make credit access much more efficient. The second one, of course, is the digital lending business, which, as KGB mentioned, we partnered with Bridgement to bring that capabilities, and customers will be able to have access up to 5 million rand within 24 hours. And we're very, very proud that the partnership with Bridgement is going to give us that capability. That will foster, of course, access to capital as well as economic participation. Thank you, KGB.
5 million rands within 24 hours of application, digital first, and an ecosystem of capabilities to support SMMEs. That's very compelling, Zweli. Thank you very much. The next question is, what are your plans with respect to your strong capital and liquidity positions? Anban?
Thanks, KGB. I think firstly, just to reiterate, our capital adequacy ratio is over 31%. Our liquidity is over 7 billion. I think that's what's key, is what really and yourself mentioned earlier, is that it gives us the opportunity, one, should we want to acquire capabilities, we can consider that, having a strong balance sheet. Secondly, we also are gaining more clients, and we're gaining more clients in all our business units, so that gives us the opportunity to further diversify the balance sheet as well. So I think starting off into FY25, it's really exciting having such a strong balance sheet that has such healthy capital and liquidity as we end FY24.
Very much so. It is optionality that
Correct.
gives us for growth, for pursuing our strategy. Well put. You forgot to mention, though, Anban, that we are also responsible stewards of this capital and liquidity. They are resources that shareholders have entrusted on us.
That's right.
And when we cannot deploy them for returns much higher than the cost of equity, we are very open-minded to declaring dividends, such as we are in these financial results, increasing our dividend payout from, I think, 7 times to 5 times. 4 times,
25.
even better. So returning some of this capital back to shareholders, really an important part of this journey to a full IPO, to say that we are promising investors that not only are we going to grow the enterprise, but we'll give them returns as and when we proceed in a progressive dividend policy going forward. The next question is directed to you again, Sibongiseni, and please elaborate on what drove the growth of My World accounts in this financial year.
KGB, if I look at the confluence of all the things that we've put in place to drive growth from a personal banking point of view, underpinned by My World, of course, we've invested quite a lot in our digital capabilities, which make it easy for customers to join the bank. We've invested in evolving our My World proposition from a simple transactional product to something that is everyday banking today. But I really think our kudos really go to our brand colleagues. About 2.5 years ago, we engaged on a journey of repositioning the bank. You'd call, that was really the first time we launched this brand as representing the spirit of audacity, reclaiming our heritage, and starting to appeal to those segments that we were set up to serve. And so our brand positioning, particularly in the personal banking space, has seen a significant growth of our client base, particularly in the youth category. And that really tells you the direction of the brand strength, that the future is even much, much more brighter. At the tail of that, we augmented our proposition by also rolling out our new loyalty and rewards program. And if we look at the engagement that customers who are participants of loyalty and reward are having with this brand, it shows that actually we are in the right direction. So all of those things conspiring together are adding to this momentum and impetus that we have seen. Of course, in the final analysis, we have to deploy our channel capabilities to support and augment these acquisition efforts. It's really been focus, drive, and backing ourselves.
Well put, Sibo. And it leads so well to the next question. That is, what new initiatives and products has African Bank introduced in the past year to support both individual customers and businesses in South Africa? You've touched on the rewards program, one of the best really in the world now, award-winning loyalty and rewards program, which offers back cash, it offers back much-needed rewards for customers who, in the last 2 or so years, have really been going through a tough time. What with the spike in food inflation, energy inflation, we've just come out of a prolonged period of load shedding. It's been tough for customers. And what you've just spoken about in terms of our rewards and loyalty program does go back to give some money back into the pocket, some products, some services back into our customers' pockets at a time of need. But also, as you indicated, the launching of our tech device financing scheme, the launching of our solar panel and inverter financing scheme, helping households that were really battling with significant, and businesses battling with significant load shedding, to actually get back onto business, get lights on, get to tune on, get to work once again. All of these new products and services really helping our customers. And I think Zweli spoke about what we're doing in building an ecosystem to support SMMEs and businesses. All of this really part of what it takes to really be a bank for the people and by the people, serving the people. The next question is from Kutlwano. It says, in what ways has African Bank's acquisitions, such as those of Grindrod Bank and Sasfin Bank's businesses, helped empower small businesses and entrepreneurs? This would be for you, Zweli.
We actually have said we're a bank that operates in the middle of the pyramid, and access to credit is one critical capability that is required. The work that we have done so far, which we'll deploy in this financial year, is the digital lending business, which will improve ease of access to credit. But what we also are going to be doing is coming up with what we call a shared platform that helps entrepreneurs not to have to invest in the capabilities like accounting, payroll, as well as invoicing and quotations. We're actually working on that, and we'll bring that to market this financial year. That is going to be one of the things we're going to be strengthening the hand of the entrepreneurs that we bank. KGB.
Thanks, Kutlwano, and thank you to everyone who joined us on this podcast with your insightful questions and interest on our story. I want to wrap up by paying a special tribute to 4,500 African bankers whose toil, commitment, whose passion has helped us produce this set of results, solid results, during a tough economic time, ensuring that we remain on track to executing successfully on Accelerate 25 and really being successful in our mission of delivering a bank that obsesses about the underserved and underserviced. Thank you very much, and have a good day, fellow.